All right. It's about that time of day again here, folks. Time to get back to work. Wednesday evening, January the 8th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is extremely important because I'm going to identify the best levels of support and resistance for tomorrow, the best entry setups for tomorrow, and most importantly, the best traps to avoid in tomorrow. That's Thursday's trading session, and we have quite a bit to cover on tonight's video newsletter. Got all the charts loaded up here tonight. Get some oil, some S&P, some Nasdaq, and some gold. We'll prep all the charts and make sure you know exactly what to look for tomorrow's trading session. We'll also grab the calendar. We get some news tomorrow morning. Got some known unknowns as we go into the end of the week. I want to make sure you know all about the best and worst times to be trading tomorrow morning. Before we jump into the video tonight, though, I do want to remind you, if you're brand new here to the channel right now, make sure you take some time, hit that subscribe button on the YouTube channel. That way you make sure you never miss another great video. Let's not waste any more time, though. Let's jump into the video for tonight. We're getting ready for Thursday's trading session. I want to make sure that we look at the calendar first. Let's grab the economic news calendar courtesy of Econo Day, and let's see what tomorrow has in store here for us. Now, we've got some news on the schedule tomorrow, right? That jobless claims report is at 8:30 Eastern time. That's the big news of tomorrow. But honestly, right, these jobless claims reports, they really don't move these markets around very much. So I wouldn't expect that to be too much of a market moving event tomorrow. What I expect to have more of an impact tomorrow is all of the known unknowns. Now, in case you've been living under a rock recently, right, we've got the issue between the U.S. and Iran, right? The Iranians with their retaliation strikes. Last night, we saw, of course, we'll grab a look at the chart and take a look at what happened. Some big runaway moves because of that. Will there be another shoe to drop tomorrow? Nobody, I think, knows what will happen tomorrow, but every day this week, we continue to get more kind of unexpected headlines, unexpected news. So one big known unknown for tomorrow is the issue between, right, the Iranians, right, and the U.S. military. We'll see what happens tomorrow, right? That is a known unknown for tomorrow. Obviously, tomorrow, right, we're also going to keep our eyes open for that U.S. China trade talks, right? We've got the first of the week next week, the 13th, 14th, and 15th next week. We're supposed to have a phase one trade deal signed. We haven't heard much about that over the past couple days. I'm surprised we haven't heard more about that. Tomorrow might be the day we crack that nut open tomorrow. And then, of course, don't forget Brexit. If you're in Europe, if you're in Asia, right, keep an eye on the headlines tomorrow. The Brexit deadline supposed to be January 31st. We haven't heard a lot of issues with that so far, so we may start seeing more of that as we come into the Asian session and Euro session for tomorrow. So these are really the three big, what I call known unknowns. I've got jobless claims tomorrow morning, but don't worry about that. I'll be keeping my eyes and ears open tomorrow on our news feed, waiting to see if we get any more information right out of the issue between the U.S. and Iran, the U.S.-China trade talks, and maybe possibly, right, some updates on that Brexit deadline coming in later on this month. We do know one thing for sure, though, right? And we talked about that earlier this week, and that is Friday morning, right, 8:30 Eastern time. We got that employment number at 8:30 Eastern time. What that means for us tomorrow is going to be pretty much kind of like a three-quarter day, right? So we'll have the first morning session, and then we'll usually have about an hour after lunch. But be aware, if you're trying to trade late in the day tomorrow, be very, very careful because that employment number is going to sneak right up on us on Friday morning. Remember, that is one of the biggest news reports we get every month for us traders. And because it's such a big news event, as we get later in the session tomorrow, again, we should see a full morning session tomorrow. And I would say probably as of maybe 2 o'clock, 2:30, maybe 3 o'clock at the latest after lunch. But anything going to the close tomorrow, you have to think is going to be a little bit dicey because professionals are going to be balancing portfolios, protecting their rear ends, right, as we go into what is potentially now a pretty good number coming on Friday morning. We saw a very strong ADP employment number this morning. They're anticipating another very strong employment number on Friday. So a quick recap for you. Again, we got some news tomorrow at 8:30. Don't worry too much about that. We are listening in, though, on the known unknowns from the Middle East, right, from China and trade, and of course, right, in Europe on the Brexit. Get to it early tomorrow. If you come back after lunch tomorrow afternoon, only going to get a small slice of the afternoon session, and be careful after about 2:30, 3 o'clock tomorrow afternoon. And then we'll talk about tomorrow night on the newsletter. We'll talk about the best strategy for Friday's big non-farm payroll report. We'll grab more on that tomorrow night on the newsletter. So now that we know what times to avoid tomorrow, we know what to be looking out for tomorrow. Let's grab some charts here now. I've got all the charts all prepped up for us. I've got some crude oil, some S&P, some Nasdaq. And how could I forget? We'll wrap up tonight on that mighty yellow, right? On that mighty yellow metal, right? Those gold futures. Let's jump in first, though, to crude oil. What do we know about crude right now? What are the biggest clues on this oil chart? First of all, the bear trend you can see here, right? That bear trend. We can obviously see the bears have control of this market right now. Anytime I see a bearish trend overall, I know my job is to look for levels of resistance to sell retracements, right? Or to sell a pullback. So I'd like to find levels of resistance that I've got marked up overhead and really try to sell up at those levels of resistance. One more big clue, if you do the math on this, we went all the way from 65 all the way down to 60. That is a $5 move down. That reminds me of when I was a kid, right? When I first started trading crude oil, almost 15 years ago now, we routinely got these types of moves. Well, the last couple of years, though, this is a pretty big move. Regarding the last couple of years of oil, we usually get at the most $2 or $3 up or down right now. So a $5 move is just, don't get me wrong, I love it, but it's just unheard of. And at least in today's oil markets, right? Hopefully we get back to those $3, $4, $5 moves consistently. But anytime I see a big move like this, anytime we see, I would call this kind of like a runaway market, right? Anytime we see these big runaway moves like this, you got to anticipate a range coming the following day. In all reality, nobody wants to buy the market because it's too bearish right now. But because it was so strong going lower, I'll bet a lot of sellers are going to hold on to their positions. And so we're not going to get that short coverage. Maybe we will, but usually after a big move down like this, right, when I see this much movement in one day, it usually ends up going sideways, right, the following day. So we really want to anticipate a range-bound market. What does a range tell us? Ranges, of course, tell us to buy low and sell high, right? I want to sell, obviously. It's a bear market. I want to sell above the range. I can buy underneath the range, but I have to use a very specific counter-trend reversal pattern. What else do we see here right now? I've also drawn a trend line off of these lows, right? We know we're bearish, so of course, I'm looking for levels of resistance. I think this channel just looks lovely because you'll notice it all lines up nicely right around, right, the battle zone from the range. Really great areas of resistance here overhead. And hopefully these markets will stop freaking out in the overnight session and we can get something actually setting up here for us, right, on these pullbacks. So we got a bear trend, want to sell at resistance, a big move down, which tells me probably going to go sideways tomorrow. Sideways ranges tell me buy low and sell high, focusing on failure patterns. So let's jump right in here. Let's dig into the chart here a little bit deeper here. So now that you kind of know the details of what the plan is for tomorrow, right now I'm anticipating this will be our range tomorrow. This could change overnight. I'm very much kind of making an educated guess as far as where these ranges will be. And anytime I see a bear market into a range, again, I want to be a seller up above the top of that range. What I've done here is I've grabbed that range and I've used that range to calculate what I call my battle zones, both above and below. Now, the momentum of this market is bearish, and the direction of momentum is what determines which pattern I'm going to be using. Bear market into a possible trading range, expecting a range here. One thing I'm looking for here is that pullback. Now, as we get that pullback, I'm looking for a couple different scenarios. For example, one of my favorite types of pullbacks in a trending market like this is a two-legged pullback. You'll notice I'm drawing that trend line up and looking for that sell up around, right, those levels of resistance. I call this a two-legged pullback setup. This is one of the more advanced setups we teach here at School of Trading. You see a great example of that back here, right? We go down, two-legged pullback, right? And you can see kind of the same idea, right, previously there. So bottom line is, one of the patterns I'm watching for tomorrow is that two-legged pullback, one leg, two leg, draw that trend line up and then look to short that sucker. Notice how I'm trying to use the trend line. I'm trying to use this reversal line, right, the top of that channel. Just get me up in this area, right? Get me up in that area, give me a level of resistance, right, to sell back down in. That's an easy pattern here for us tomorrow, right? We may not get that pattern. We may just jump higher here. And as we jump higher, I'm anticipating buyers will come in and likely try to buy that pullback as a reversal. And if they do commit to that pullback, I'm looking for a very simple combination setup that is a buyer failure into a seller pullback, right, going back into that trading range, right? See how that kind of works right there? Imagine now, right, we get that pullback up off the low, moving average comes over, buyers now try to buy the pullback, trying to get that reversal. It's not a bull market though, is it? It's a bear market right now, and you're running right into all of these levels of resistance. So a buyer who tries to buy the pullback up there, I know exactly where their stops are now, and I'm looking to sell right into those stops and then grab that pullback to the moving average, right, before we go back down into that trading range. A failure into pullback combination. Now don't forget, if we sit inside that range, we do nothing, right? If we're inside the range, we sit on those hands. If we end up going sideways, just wait for it to pop up. Let those buyers try to buy the breakout pullback and sell into those stop losses with that buyer failure pattern. Now, what if we go lower here, right? What if we go lower here? Boy, get a beautiful level of support down here around that measured move in combination with our buy zone. Most important thing to remember is if we want to buy underneath this range, remember, it's a bear market. So as we go lower, I want to go back up into that range, but I've got to respect what? I have to respect momentum. Momentum is too strong just to try to buy it, right? We see this all the time where the market will run lower. You'll try to buy off the low. It'll come right back down, stop you out, and then guess what? Then it goes all the way back into the range, right? You probably have been caught by that before. I know I have many times earlier in my career. To avoid that kind of stop and go or that stop run, what I look for is a very specific type of entry pattern that I call a nested failure pattern. We've talked a lot about these on the video this week here so far, but most important thing is that if I'm trying to go long, right, I want to get down to an area of support. I want to respect those sellers, right? Let them try once, let them try twice, and then once those sellers have that kind of proverbial rope wrapped right around their neck, I look for that nice signal candle. And again, imagine all those sellers, right? Their stops are sitting right above these highs, and we're buying into their stop losses to go back up into that trading range. Now, remember, we can be relatively aggressive selling above the high here, right? Buyer failure into bear pullback as we go down. But if you want to buy off of that low, it's going to be that nested one try, two try, and then we're buying, right? We're buying up from there. Now, speaking of buying, is there a possibility here this market may reverse? What would a reversal look like? Well, first of all, in order for me to have confidence to trade a reversal, I need to get momentum going back in the direction of the bulls. So if we get a big pop higher here, again, I'm looking for that buyer failure pattern to drop it back in. But if we can hold that pullback, if the buyers can actually hold that pullback and give me some reason to be confident, if they can jump off that moving average, I call this a 1, 2, 3 reversal pattern, as in 1, 2, 3 reversal. If I can get that 1, 2, 3 reversal, I'm going to mark up the high of the first leg. I'm going to mark up the trend line off those highs. I'm going to draw a hidden channel low off of that low. There's my sweet spot right there. I'm looking for that buy somewhere down around the low of that channel and the high, right? The previous high there. It's a beautiful, beautiful setup. I call that a 1, 2, 3 reversal into a hidden channel pullback. Now, let's say for some reason something happens overnight and the market just screams higher. If it screams higher here, I have a much more aggressive pattern, right? I call it 2 try breakout pattern. 1 try, 2 try, and up from there. Now remember, this is a very aggressive pattern, which means it's going to be a very aggressive move, right? It needs to be very, very strong. And again, we've got to anticipate there'll be some sellers here trying a couple times. We want to really make sure we get those 1 try for the bears, 2 try for the bears, because remember, if you're going to be buying up here, you're buying quite high, right? And you're susceptible to a pullback. So what you need is you need those stops to act as fuel, basically, right? If the market takes off to the upside, bears try once, bears try twice. We know their stops are hanging out right above those highs. All we need now is a nice, strong signal candle, and we'll buy right into those stop losses. Now, obviously, if the buyers can take control, their target is all the way back up. I mean, it's possible we get $5 back up, but I would say that's probably not going to happen tomorrow. We may definitely see this thing reverse, though, and try to make a good run for it. So we'll have to wait and see if we get that reversal. So now we know the plan for tomorrow. We're anticipating a range. We're going to buy low and sell high using my favorite entry setups. We're going to resist the temptation to try to call a reversal. We'll wait for the proof of that 1, 2 reversal, right? 1, 2, 3 reversal, and then we'll trade that pullback to that hidden channel low. So we talked about a lot today so far here, right? We covered the failure patterns, the nested failures, the breakout patterns, right? The reversal patterns. I want to give you a much deeper dive into all of these patterns. And what I'll do is I'll give you access to a free trading course here at School of Trade to learn all my favorite setups, my favorite ways to draw ranges and channels. You'll see hundreds of examples of how we apply this strategy to our favorite futures markets. So if you're here for the first time, make sure you grab that free course linked up in the upper right hand corner, right? And then of course, don't forget, if you're on the blog right now at sidewaysmarkets.com, I'll put a link below the video on the blog. But again, grab that free course. It's linked up in the upper right hand corner. I'll put all the links in the description of this YouTube video for you guys. So now we know what we're looking for here on crude oil. Let's grab some S&P here next up, shall we? Now, S&P, what do we know about the S&P right now? What are the big clues on this chart? First things first, a bullish trend. Yeah, just a little bit bullish here, right? A bullish trend here on the S&P. Anytime I see a bull trend, it tells me to buy pullbacks to support levels. Now, much like on oil, we saw a huge move today. I mean, just remarkable how much volume happened overnight and that big rally back up to just tap those new all-time highs today. Much like oil, whenever we see this much movement in one day, the following session is probably going to go sideways. Now, we may get a continuation, we may get a reversal, but under most conditions though, when a market goes this far, this fast in one day, everybody's got to wait for things to kind of rebalance right now, and then almost always produces some sort of range-bound market. And again, I'm kind of, I'm definitely giving an educated guess right now as far as where that range is for tomorrow, but for all I know, we may see this range develop into something wider, so be sure to join me tomorrow morning in our trade room, and we'll update our charts as we see more information. So bull trend says buy those pullbacks. Large move higher says anticipate a trading range tomorrow. What does a trading range tell me to do? Range-bound markets are balanced. I want to buy low, I want to sell high, and I want to avoid the middle. It's almost identical to what we saw on crude oil, except the opposite direction, right? So I take the size of that trading range, and that helps me identify the buy zones. It identifies the sell zones, right? Very big clue, that potential. Again, I don't know if this will be the exact range for tomorrow, but we'll have more information as we go into the overnight session. The final big clue on this chart is that spike and channel. You can easily see how the market spikes up into that channel going higher. Spike and channels are really powerful clues because they basically tell you find the first pullback, the base of the channel, and that's usually going to be your best buy zone now, right, for that pullback. Now, you might be thinking right now, boy, that's going to be a really deep pullback, isn't it? It will be, right? So we want to anticipate that. It's, the hard part is there's a lot of news coming out. There's a lot of known unknowns, right? So we may see a very sharp pullback. Anytime I see a spike in channel, I know that the odds are pretty good we're going to get some sort of sharp pullback. And I say this because I don't want you to get fooled and think that sharp pullback is actually a trend reversal. That's kind of the point I'm trying to make right now. So again, bull market, buy at support, trading range, buy underneath the range, spike and channel. Don't be fooled by a deep pullback here. All right, so now let's put the plan together. Now let's roll up our sleeves here and let's kind of put this plan together. Now again, we know we're bullish. I want to be a buyer, right? I want to be a buyer where? At support levels. Got my trend line drawn down here. And you'll see I love these kind of support trend lines underneath a trading range. We oftentimes see these kind of, kind of expanding triangles, if you will, around these ranges, right? So that's definitely going to be a place to keep your eyes on tomorrow. Most important thing, though, right now is I want to get down into that buy zone, or I want to get up into that sell zone overhead. Let's talk about the buy side first, right? The buy side first. As I go lower into that buy zone, same plan as we talked about on oil. As the market tries to go lower, I'm anticipating that some of the more inexperienced traders are going to try calling a top on this, and they're going to think this market has reversed. So what I do is, once I see a pullback below the range, remember, this is the key. The range is the balance, right? Think of the range like a magnet, right? A lot of volume piled up right on top of there. So think of that range as the magnet. So when the market runs lower and the sellers try to sell that next pullback, now we know exactly where their stops are and they're exposed. This is not a bear market. Not only is it not a bear market, it's not a trending market. It's a range at this point. So if we do pull back, we know the odds are not very good for those counter trend breakout sellers. Most breakouts in a range in liquid markets, right? Not penny stocks and cryptos, right? Real markets, liquid stocks, liquid futures contracts. Breakouts don't work in these types of markets. These are real markets, right? Professional traders like real markets with real liquidity and real consistency. The difference is in these highly liquid markets, breakouts don't work very well, right? You can see breakouts simply don't work very well. So if I get a run lower, I'm anticipating those rookies are not going to know any better. They're going to try to gamble their way back down again. And I'm looking to be a buyer right into those stop losses, right, as we go back in. Now, a lot of times we'll get a chance to grab a failure into that pullback combination, but don't forget, right? Just don't forget, you don't want to be trading inside the range, right? So make sure you get that pullback below the trading range. Sometimes what happens is you'll see a move come lower, the failure will trigger, but then you don't get the actual pullback until it's inside that range, and those are really dangerous patterns, right? You don't want to take them right inside the range. They have a tendency to kick back on you, right? Get chopped up and then they kick back on you, right, to kick you out of that trade. So failure into pullback combination coming off of that low. Again, I get a great vision on this going back up into that trading range. Failure into pullback combination. Or what if we get a really deep pullback? This is where things are going to get interesting here, because as we get that deep pullback now, again, we're anticipating that because of that spike in channel. I don't want you to get fooled, though, by it. I also want you to make sure you have the right strategy for it as well. So if we do get that deep pullback here, I'm going to get rid of these here for a moment. if we do get that deep pullback, that strong move down, yes, I do want to be a buyer, but no, I cannot try to shove it right down their throats, right? I've got to respect what? I've got to respect the momentum of the market. And a real easy way to do that is if you understand the idea of buying into the stops of those sellers, just give those sellers a little bit more room to breathe, right? Let them, as I always say, let them dig their own grave, right? Let them wrap that rope right around their neck. Let them try once, let them try twice. And again, once we see those sellers trying a few times now we know exactly where their stops are, right? And we can buy right into those stop losses. And don't forget, these types of deep pullbacks, they oftentimes end up giving you a strong move up and then what we call a two-try trap pattern. So here are two setups I'm watching for if we get that deep pullback, right? The deep pullback now, it'll be a nested failure pattern. Nested meaning there's multiple failures during that, right? During the pattern, right? Nested failure, two tries for those bears. And then again, into that trap low. A lot of times it'll shoot right back higher. It'll try to go into the range. And I'm going to look for that little trap below that prior swing. Those are the two setups I'm watching for if we get that really deep pullback. Now, I know what you're thinking. If we get that deep pullback, when can I start to sell it, right? At what point can I sell this market? Well, you can sell it once these sellers prove to us that they've got it, right? Once they prove to us and they actually hold that pullback, the key is the personality after we jump off the moving average. Because a lot of times what happens is we'll see a strong pullback. We'll see the moving average come over, right? The bears will try, they'll try, but they won't get anything, right? They won't get anything going. And when I see that happen a couple times, when I see once, twice, now I know the writing's on the wall. It's only a matter of time before they run out of bullets, right? And once they get their stops hit, it's game over for those sellers. We'll go right back up into that trading range. But if we make that big, deep pullback and we get that pullback and it holds and we get a strong jump off that moving average, well, guess what? Now we are a bear market. And in a bear market now, I want to sell at resistance. I'm going to mark up that high, mark up those lows, find that hidden channel, and this is a beautiful setup. Now, these oftentimes do happen quickly, so you've got to keep your eyes open on these. Well, let's put it this way. The reversals are kind of like a hurry up and wait. You have to wait patiently for those bears to actually get control of this market. Once they get control, then the pullback oftentimes happens pretty fast. So once you see the 1, 2, 3 reversal, as always, look for that high, right? We're looking for a sell setup off the high of that hidden channel. It's called a 1, 2, 3 reversal into a hidden channel pullback, right? That's going to be the best way to get short here on the S&P for tomorrow, right? But what about as we go higher? Can I sell this thing as it goes higher? You can, but you got to use that counter trend reversal pattern. What was it called again? If you watched last night's newsletter, what was it called? A crown reversal, right? So again, we know we've got resistance here overhead. I want to sell above the top of a range, the range-bound market. I do want to sell, but as we go higher here, we're way too bullish just to start selling here. Let the buyers try once, let them try twice, and here's the difference. When you're trying to go against the trend, counter trend reversal, I like to use that trap high. It's a very subtle difference, right? If this was a bear market, I would only look for the 1, the 2, and back down. Right? Let them try once, let them try twice. Because it's a bull market, though, I want to really be patient, try to get those buyers to try twice. And my bread and butter has always been looking for that trap high above that second try. Again, I call this a crown reversal pattern. And then as we go higher, right, if the buyers can hold it, now keep in mind, these are all-time highs right now. If the buyers can hold it for a 1, 2, 3 breakout, again, we'll mark up that hidden channel, buy the low of that hidden channel. You'll notice I'm not trying to buy the breakout. Breakouts are unreliable in liquid markets. If things really get crazy and it really jumps up higher here now, I can use that to try. I would definitely look for a trap low on that, though, just because it is going to be new all-time highs. very similar to a 2-try breakout pattern as we talked about on oil before, but I got to make sure I get that trap just because we're at all-time highs and the markets tend to get a bit squirrely as the markets, right, go up to new all-time highs, right? So you want to be a little more conservative on that breakout pattern. So guys, got a pretty good plan here for us on the S&P tomorrow. We're looking for ultimately seller failures down underneath those lows, right? We're keeping an eye out for the 1, 2, 3 reversal and of course possible crown reversals to sell off the high or a successful breakout running higher. And again, I'm just simply marking up the charts tonight, but if you want to see a much deeper dive into all of these patterns along with hundreds of examples of how we apply these to our favorite markets, make sure you grab that free trading course in the upper right hand corner. All the links, by the way, are in the description of this YouTube video. Let's keep going though. How about some Nasdaq right now? Got the crude ready to go. Got the S&P all locked and loaded. How about some Nasdaq? Nasdaq, very similar to the S&P, but we definitely have some differences. Nasdaq has a bullish trend. A bullish trend reminds me to buy pullbacks at support level. I've got this very strong move higher. Anytime we see such a big move in one trading session, we do anticipate a range tomorrow morning. I'm really having a hard time right now finding that range right now. So in all reality, it may keep going higher up to that big round number overnight and then going into a range. So I may need to adjust this tomorrow morning. And again, as always, we're going to trade this stuff together like we do every morning in our trade room. So we'll come back and we'll adjust these charts tomorrow if necessary. But right now, though, we'll leave the range where it is right now. We are anticipating a trading range, assuming this is the range for tomorrow. And again, it is an assumption at this point. Assuming this is the trading range, I want to buy underneath the range, right, at my levels of support. I want to sell up above the range. But again, don't forget, you're going against the trend. So you want to make sure you got the right sell pattern, right? That counter trend pattern that we talked about just a few moments ago on the S&P. And again, as I mentioned earlier, that big round number overhead, right? We may end up seeing this market kind of shoot up higher and make the range up here as well. So the big round number is definitely something we're watching here as we go into the overnight session. I've also got a beautiful hidden channel here. I really like this hidden channel a lot. Marking up these highs down to those lows. The midline just fits like a glove on that. That hidden channel will be a great combination area there. Lots of confluence down around that 88.80 area, prior range high, right? We've got the battle zone from the trading range and of course the low of that, right, of that hidden channel. So now we know what the overall details are right now. Let's play the game here. We got a couple scenarios I want to get ready for. Now the first thing is on this, right, on this Nasdaq, I've got my trading range here. I've got my buy zone number 1. I get my buy zone number 2. Now, there's a couple things I want to be ready for, right? One, of course, would be a pullback underneath that range into the first buy zone down there, 8,900, 88.75. In these scenarios, a very, very simple strategy. We know the market's bullish. We know a breakout is likely going to fail, but we can't predict. So I wait for sellers to try to sell off the moving average. This tells me exactly where their stops are, and now I know I can buy right into those stop losses for an easy target going back up to the other side of the range. And then don't forget, measure the pendulum swing, and that will give you another target as you go higher, right? So we're buying underneath the range with a seller failure pattern, target off at the other side of the range, and of course leave the runner up to that pendulum swing waiting overhead. Now I also have that secondary battle zone. Let's say, for example, we get a real strong move down, right? Now in a real strong move downs oftentimes will give us those two-legged pullbacks, draw the trend line over, up and over and go. So as we do pull back into that secondary battle zone, right, if we get underneath that hidden channel low, keep your eyes open for a one leg, two leg, draw the trend line over, and then again up and over, right, for the two-legged pullback pattern. We get a lot more information on that in the free course that I mentioned earlier. And then obviously too, if we go straight back down, right, if we don't get the two-legged pullback, that big move lower here, remember, give those bears the benefit of the doubt. One try, to try. In fact, you may actually see them try to use the underbelly of that hidden channel. Let's put it this way. If we see them effectively trying to sell off the underbelly of that channel, this looks really, really good. Now at that point, again, I want to be a buyer, but if it really shoots lower, I have to respect that short-term momentum, anticipate the bears will try a couple times, and then I'm looking to be a buyer as I go back up into that trading range. And again, just remember, right, that pattern oftentimes ends up slamming higher. And when it slams higher like that, just keep your eyes open for those little traps. Right, we'll trap before we get back into that range here. Just again, remember, the goal is to go back to the other side of the range, and then again, leave that pendulum swing target, right, for your bigger target for your runner, right? This is why ranges are so valuable. They tell me where to get in, they tell me where to get out, and they also tell me where to leave that runner. You know, and again, we may have to update this range overnight, but this is the basic plan here. A nested failure pattern, right? A nested failure into a what I call a two-try trap pattern, right? We'll talk more about that tomorrow morning, right, in our trade room. All right, so we know those are the plan for those pullbacks on the Nasdaq. As always, if we get stuck in the middle, stay away from that middle. Remember, the middle is the magnet. Wait for price to get underneath that range. Wait for those sellers, right, to dig themselves into a hole and buy into those stop losses. Now, as we go higher up to that big round number, this is going to be a bit tricky, because I would normally say as we go higher, just look for that crown reversal and sell it back down. And I'm not saying that we can't look for that pattern tomorrow, but what I will tell you though is it's likely, if we get this market to run higher here, it's likely that they're going to kick their feet up on the desk and get comfortable up around that big round number. And that's fine by me. I could care less, right, where the range happens. But if we do see that range develop up around that big round number, we know why, right? 9,000 is a pretty juicy number there, right? And then, of course, once we have the range, we look at that two-try failure pattern, right? So once we know we have that range, let me mark this up a little bit differently here for us. Once we know we have that trading range, then what I do is I use the size of the range to find my levels of support. I wait for that pullback. I know the market's bullish. I know most breakouts fail. I wait for those sellers to try selling that breakout pullback, and we're buying right into those stop losses. So don't be surprised if this thing continues up to that big round number and goes sideways up around that, again, 9,000 big round number. Now, there is a chance here we may also see the market can keep grinding higher here, right? So let's keep grinding higher. I'm going to keep waiting for that sharp pullback. I'm going to keep waiting for that chance to buy the dip. All right, I'm not going to mess around with buying high right now. We're way too high up on the ladder right now. If you want to buy, right, if you want to buy, you want to wait for a pullback at this point, because buyers are going to resist, right, the idea of buying this high, right? Such a big move today. It'll be, unless we see something dramatic happen overnight, and it would have to be very dramatic. You have to find some way to convince these buyers to think that something more than 9,000 was likely in the near future. I'm not sure what it would take to convince them on that, right? But that's what it would take. It would take a lot of convincing. Something would have to happen overnight in Asia or London, come out of the White House overnight, right? That would cause them to think that way. The bottom line, though, is if it does keep going higher, just keep waiting for that deep pullback. Keep waiting for those sellers to dig their grave, right, and buy right into those stop losses as we go. So Nasdaq's looking pretty good. The last thing, of course, is the reversal. What does reversal look like? Strong move down. That's the first step. Pull back to the moving average. And again, strong move off the moving average. Remember, we're not trying to sell that first pullback. Right? I know it's very tempting because reversals are very exciting patterns, but they're not very reliable, right? What is more likely is 1, 2, and then back up from there. Wait for that continuation, then mark up the low, mark up the trend line, find that channel. There's your sweet spot right there, and we're waiting for that pullback to sell off the top of that channel. Target's obviously down to retest the lows from today's trading session. And again, like I said earlier, I'm just simply drawing these setups on this chart. Make sure you grab that free course I mentioned. It's linked up in the description of this video. Nasdaq looking good here. Let's wrap it up tonight on the yellow metal, the gold futures. Gold, of course, has a bearish trend, another kind kind of runaway market on our hands here today, right? Bears have control of this. It's a very strong bear trend. Anytime I see a bear trend, I want to sell at resistance. Anytime I see this much movement in one day, I expect to see a range the following day. Gold has made our job pretty easy here. As you can see, they filled that gap over the weekend. And of course, you can easily see that trading range. The range, of course, tells me look for selling opportunities up above the top of that range. And with the right pattern, you can buy underneath the range, but you got to make sure you stay patient for that. What was it called again? That crown reversal, right? That reversal pattern that we like so much on this newsletter. What else do we have here right now? Hidden channel. Boy, this is about as hidden as channels get, right? I'm drawing a trend line down off those lows. I've got it lined up at the highs. Now, the channel itself isn't really the giveaway. The giveaway here is the midline, right? Look at that midline. You can definitely tell when the midline fits like a glove like that, you know that people are going to have their eyes on the top of that channel. Again, we know we're bearish. I want to be a seller off the top of that channel. And of course, I want to use, right, a failure pattern because it's a range. Now, you'll also notice too, we got a measured move going lower. That is a triple measured move, usually 3 legs down, usually results in a range environment. So be careful trying to sell as the market goes lower. So now we know what the deal is here. We know the plan here on the gold, right? How do we sell this market? Well, again, I've got this trend line waiting overhead. I'd love to get this thing up above the top of that trading range, get the moving average coming over into a buyer failure, into seller pullback combination pattern. And again, you can see lots of examples of that pattern in that free course I mentioned linked up in the upper right hand corner, right? Don't forget though, if this market really gets crazy and runs higher here, don't forget to look for that nested failure, right? 1, 2, and back down. I don't need a reversal pattern on that because it's not a bull market at that point, right? It is a bull market though if they go what? 1, 2, 3, right? If they hold that pullback and then jump off the moving average, well, now this thing's a bull market. Now mark up the high. Mark up the trend line, find that hidden channel. There's my sweet spot right there, right? We're trying to buy the low of that, right, of that hidden channel. If things really get crazy and make a strong push up, right? Don't forget that 1, 2, I call it a 2-try breakout pattern. Remember, the key to this pattern is it's a very aggressive setup because you're technically buying high, right? This is the definition of buying high. You got to have a strong move up. You got to blow right through that battle zone. And then again, what you need here is you got to find a way to get some stops to run. That's the trick. That is the trick to buying high. You know, buying high is a dangerous plan unless you can give those counter trend moves, right, a little nudge. So for example, as we run higher here, the first pullback is usually just a profit-taking pullback. The sellers come in off that second, and then of course, we're literally buying right into those stop losses, right on that. Again, I call it a 2-try breakout pattern. I let the bears try once. That gives me their stops to hit, and the stops are what you need to fuel that market going higher. Because if you get in the habit of buying high, you put yourself in a position where you can get stopped out pretty easily on whatever shallow pullback. So those are 2 patterns I'm watching for as we go, right, as we go higher here. Now, as we go lower, what's the plan to buy off that low? It's a range here. Got a measured move support level over here, right? What's the plan to buy off the low? It'll be a counter trend long. That means we got to go crown reversal. 1, 2, and then back up from there, right? What I want is, I want to get, again, because it's a counter trend reversal, I like to use those trap patterns. It's just like a nested failure pattern, which I mentioned earlier, but one more layer of protection, and that is that trap low, right? That trap low. I call it a crown reversal. Now, as we go lower, if we do break down, where's the next level? 1525. 1525 is our next big milestone. That means 1, 2, 3 break out. Mark the low, mark the high, sell the high of that channel, right? Sell the high of that hidden channel high, or strong move down. 1 try for the bulls, 2 try for the bulls. Now you know where their stops are, and we're selling right into those stops with that 2-try breakout pattern. right? So 2 easy ways to profit, but we got to get the market committing to the downside. If it doesn't, if it goes just below the measured move, they try once, they try twice, right? Pull it, buy it, right back up into that trading range as we go back into that balance area. Ranges are balanced areas, as you know. So gold's looking pretty good right now. Hopefully we don't get stuck in the mud too much around this range. If we do get stuck in the mud down here around the range, sit on hands, wait for the pop higher, wait for those buyers to wrap the rope around their necks, right, and sell right into those stops. Or if we do try to make a run lower here, wait for proof. Wait for proof with a 2-try breakout pattern, 1, 2, 3 breakout, or wait patiently for that crown reversal. And, my best advice to you is if you're trying to use that reversal pattern, just remember it's probably going to take longer than you think it will. Counter trend reversals usually take longer than you think, right? It's like turning around one of those battleships, right? Takes a while sometimes. So stay patient, wait for it. Don't jump in too early. And now we got a plan put together here on the gold, right? So gold's looking good here. I want to sell the pullback here on gold. I'm definitely keeping an eye, right, on that reversal back to 1600. But again, we've got to wait for the proper entry setup to get momentum on our side first. All right, guys, don't forget tomorrow morning we're in our trade room as we are every morning, 8 o'clock Eastern time, Monday through Friday. To get started, join as an advanced member here at schooloftrade.com. If you want to join me tomorrow morning and every morning in our trade room to trade this strategy with me, after all, it's very difficult to learn this stuff on your own. I can teach you all this stuff here on the video tonight, but the real most effective way to really learn how to do this is to come out and join me and do it with me. I have all the cheat sheets, all the checklists. I got a great systematic approach to updating charts, qualifying setups. You can learn more about all the details on our website. If you're on YouTube right now, all the links in the description of the YouTube video. Get registered on our website for the advanced course. If you have any questions tonight, don't forget to call that toll-free phone number. Use that live support tool. And as always, right, if you're not ready yet to be a member, make sure you grab the free course as part of the free trial. Again, I'll put all the links in the description of the YouTube video. Keep in touch, though. Tomorrow morning will be before you know it. I want to see you tomorrow with me at 8 o'clock Eastern Time. If I don't see you guys tomorrow morning in the trade room bright and early, come back and see me tomorrow night on the next edition of our nightly newsletter. As always, great to be here with you. Hope you had a great day today. Hope you have a great day tomorrow. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.